Today's video is all about HBAR Hedera, a future built on trust. Today we're going to be doing a deep dive into this project, looking into some of the fundamentals such as the team, the tokenomics, the utility, and the overall value proposition, trying to figure out whether this project has what it takes to make it to our portfolio. So you know what, let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. So looking for opportunity, and the question is Hedera an opportunity? Guys, today we're going to be doing a deep dive. We'll be looking into this project again, looking into some of the fundamentals. Guys, we want to make sure that we know exactly what HBAR is, what Hedera is, their value proposition, what they're trying to do as a software solution, and more importantly, guys, we're going to be taking a retail perspective. What does that mean? That means that I'm going to be focusing on all the major categories, the major details that an average retail investor would be interested in. Okay, this is very important because again, we're looking for retail enthusiasm here in this space. There's not much enthusiasm, which means that there's not a lot of volume, no retail looking into this market at the current moment. However, guys, this could be the opportunity to be finding these gems that are oversold, undervalued, and obviously offering value propositions, right? This is what we got to be looking at, guys. Of course, I'll be looking into all the details, but we're going to be using the main website as the platform, right? We want to navigate the main website. We want to look at the white papers. We want to look at all the documentation that the team has provided. It's up to the team to give us all the details we need in order to get fundamentally bullish. But what's most important, obviously, with that as well, is that the communication has to be geared towards the average retail investor, right? This is the average individual that wants to know about HBAR needs to be given this detail. Guys, I'm going to be posting, or in the description, you will see timestamps so that you can go right straight to my overall summary that I'm going to release all over the socials. It's going to be an infographic that's going to highlight all the details regarding HBAR and how we could be navigating it, how we could be bullish about it, some of the things that we need to be aware of. So all of that's going to be in the timestamps, and of course, I'm going to be posting that all over the socials. All right, so let's begin. As you can see, the future built on trust. So let's kind of get a feel of what HBAR is trying to communicate. As the world's only public network governed by known institutions, okay, Hedera is the trusted platform for building fast, secure, and compliant decentralized applications. Fair enough. So what we need to do is focus on, I think the first sentence is a big one. You know, to suggest that it's a public network governed by known institutions, can deliver a bit of mixed messaging. So we'll definitely take a look at that. You can see they do support builders, and if you need to contact them, they have some contact information. Institutional governance. So we trusted by the world's leading institutions. You can see a lot of different institutions here. What's important here is how the HBAR organization is structured. So Hedera operates on a permission model where council members run network nodes and approve updates to the technology. So council members, right? So is it the general public, or is it just the council members? So Hedera operates on a permission model where council members run the network. This is important, and they run the network, they have the nodes and all this kind of stuff. So that means that they are pretty much the decision makers, right? Updates to the technology, and they approve, right? So what we need to know is we need to define who are these council members. And, you know, the council members at this point, what we're being shown here are a bunch of different players in the tech space, generally speaking, right? So it could be even outside the tech space, but a lot of the times it is within the tech space. So we see Ubisoft and a few others, BitGo, blockchain, for energy, Chainlink, and many others, Australian Payments Plus, Dell Technologies. So they're big companies, you know, T-Mobile, big companies that are here that are part of this council members, right? And these council members, they run the nodes, the network nodes, and they approve updates to the technology, right? So when you have heavyweights like Google, Hitachi, IBM, and many others, you're going to start to, question, are they partners? No, they're not necessarily partners. Are they members of the council that do, like they suggest, that operate the nodes and approve updates? Yes, they do. Are they token holders? Of course, I'm assuming that they're going to be. Do they have a vested interest into HBAR? I'm assuming that they do, right? So it's basically a council that makes decisions, but they're representatives of the industry, right? They're not average individuals like you and I. These are heavyweights that have, some pull, and some insights and some obviously experience within, business, and obviously, like I showed you, majority of it is either related to crypto, so tech, maybe finance, and so on and so forth. Okay, so we're gonna be looking at this in a little bit more because again, this is what makes their governance model a little different. Because generally speaking, when we talk about a DAO, a decentralized organization, or if there's any governance within a project, usually it's governance that is lended to the actual holders at the lower level, meaning you and I, right? The more tokens we hold, the more we can propose different things and we can vote on different things. And it's an open type of governance model. And in this case, it's very selective, right? And now again, who decides who becomes part of the council and so on and so forth. This is all things that need to be ironed out, so you can understand the level of decentralization the organization has. Now, based on face value and what I'm seeing here, although they do have governance and define a level of decentralization, this type of structure is not as decentralized as other structures as I've seen in the past. I would say that this, lends itself to be more centralized, but still offer a benefit from this centralization. The benefit is again having industry professionals at the highest level involved in your governance, right? And they can act as individuals that could provide some information or provide some some sort of guidance to the organization, to Hedera. And in that case, offering up that guidance does have value. So you're giving up a little bit of that centralized decentralization for centralization, but you benefit from having these guys there ready to offer some counsel of any sort or when need be. As you can see, big companies are present. Okay, so let's continue going forward. That's something that you just have to keep in your mind for a second here. Let's see, featured content. They do have a blog. I'm glad to see that their blog is up to date, ready to go. You got a lot of good information there. I would say HBAR Hedera offers a lot of educational material. Okay, to the point that it is beyond the retail investor. It's very difficult. Like their white papers and their learning material is at a high level, and I appreciate that, no doubt. However, we do have to understand for the most case, most people that are in this space are average individuals. We're not computer scientists, we're not engineers, and we want to see something that's in the language that we can understand and be comfortable with. Okay, so that's very important that websites and various communications from these companies take these facts into consideration. It's not just about providing all those high level details, but making it digestible for the average retail investor. Super important stuff. Okay, so let's keep on going down. Let's see what else we got here. We have some testimonials. Founder Jonathan, okay, at Equity Labs. You can see some testimonials there. Proof in the numbers: 71 billion total transactions. So their transactions are doing great. Transactions in the last 24 hours, and nice and speedy. Of course, their structure of their consensus mechanism and the type of technology that they use is going to lend itself really well to scalability, speed, and such. Right. So seconds to consensus finality, and you can see the actual work that is involved doesn't cost a lot of energy, right? So they're doing pretty good. As far as a blockchain goes, it is a very good blockchain, well-designed blockchain, right? Now, it is, in fact, just to correct myself, not a blockchain. But again, I'm trying to keep it simple, guys. It's not a blockchain. However, it is considered a cryptocurrency or a crypto project. So you're going to see a lot of these type of crypto projects on CoinGecko, CoinMarketCap, treating HBAR like a blockchain technology, but it really isn't. To be honest, it really isn't, and it adds its own value based on the fact that it uses hashgraph technology. We're going to touch upon that in a second, so bear with me. So what they do have is something called responsible governance. So the Hedera Council is a rotating. This is important because we talked about the council and who they are and what they're made of and so on. So, the Hedera Council is a rotating group of the world's leading enterprises, institutions, nonprofits, and universities that govern the HBAR network, ensuring that the network security, integrity, and long-term strategic direction. So basically, they're relying on industry professionals to guide Hedera. Okay, the council has implemented both foundational and application level measures to ensure compliance with the U.S. sanctions, laws, and regulatory standards. So this is also very important because, yes, HBAR, a lot of people consider it an ICO 222. So the ICO 20022, that many people consider it that. Now it's not officially that categorized as that. However, their dedication to compliance has made it generally accepted amongst the community that it does fit within the standard, the ICO, again, 222 standard. Now, in that case, obviously, if you're being compliant, and the organization is very institutional, like bringing in all these different institutions, like I mentioned, big business, big corporations, schools, and all this academia and all this kind of stuff. If we're going to get all those heavyweights all involved, the truth is that we've got to expect, that their focus might be compliance, and it is. Okay, so I'm expecting them to have full, basically acknowledgement of becoming an ISO project. Okay, so they implemented lots of good things to keep in within laws and regulatory standards. As a result, HBAR is recognized as one of the most regulatory compliant public DLT networks in the world today. Okay, so if that's the case, we're waiting for that official, you know, basically title. All right, so it is pretty good, guys. As you can see, there's level of centralization and decentralization, and when we talk about compliance and we're talking about doing these types of things and being under the traditional standards that are traditionally prescribed by our traditional infrastructures and finance, we start to say to ourselves, well, there's some level of control here, and there's levels of third party intervention as to how things operate. So here we are, trying to judge centralization versus not so centralized Web3 and maybe not so Web3. Okay, so this is very important, guys. I know there's a lot of tension regarding this topic, but it needs to be clear. It needs to be spoken of. It needs to be said. Okay, and as an individual that has been here since 2016, looking at charts, looking at the market evolve, I'm going to tell you that we've branched off a little bit on such topics. Okay, the need to be fully centralized and the need to be somewhat centralized definitely is a level of contention. Okay, so built to last, foundational trust layer. Hedera powers fast, scalable, and compliant applications. It's ideal for regulated industries where performance and compliance matters. So this is their focus. This is their value proposition. They don't want to play any games with the law, with any regulation. They want to follow the rules, provide a high quality product, led by industry professionals that know industry, know business, know economics, know how to make money, and ultimately provide this as a solution, a software solution. Okay, so they have stable fees, nice and cheap, starting at 0.0001, the lowest and most predictable pricing in the industry, finality in seconds, so speedy, built-in regulatory compliance. So this is what I'm saying. They want their protocol to have all those different details in order for them to be accepted in the traditional landscape of finance. Fast, of course, EVM compatible, something that we need to talk about because a lot of the times when you get these closed environments, sometimes you don't get this EVM compatibility. Okay, so HBAR supports Solidity smart contracts, which is the native language in Ethereum. Okay, and all EVM compatible chains have this ability to run the EVM, the Ethereum EVM, which is a virtual machine, a translator that will allow the translator to speak Solidity, which is again the native language for Ethereum, and be able to translate that language into something that is executionable, right, on a smart contract program, right? So it has tools, Ethereum-based tools and applications, including both native and ERC compatible tokens. Perfect. So the native aspect means that they also have their own native EVM, their own native tech stack. They are not just relying on ERC20s or Ethereum-based projects, okay, or code. AI ready, of course. We need to have pepper in a bit of that AI. I think all projects, despite their narrative, are going to have some level of AI. Fair by design, transactions are ordered by consensus timestamps, ensuring fair sequencing. Okay, this is important. And build in resistance to front running. Okay, so energy efficient, we talked about that earlier on. So there are a lot of good benefits here that we could say that HBAR is providing as a L1, as a smart contract platform. Why Hedera is the trust layer of the digital economy. Hedera combines scalable technology. We talked about this, governance and built-in compliance, all repetition here, guys. I don't like when websites repeat themselves, right? They have a limited time to keep my attention. You don't need to repeat the same things over and over. Okay, join in and start building, supporting developers, I think is super important. Getting people involved, building on their tech stack, and so on and so forth, providing more utility for the actual coin, which again is HBAR, and their independent code-based management ready to get started. And that's the end of the website. So we got the footer here with their socials. They got a Discord, which is great. Really active, nice and organized, nice and clean, active Discord. Their LinkedIn is great. Team is fully doxed. We'll talk about them in a second. They got their X account, of course, and YouTube. Okay, so pretty good. They got a lot happening here. And you get some various links to various documentations that you can go through. Again, I'm just going to throw this out there. Their communication is not very retail friendly at all. And as you guys know, I have approximately 140 deep dives under my belt, releasing one deep dive every single week, you know, hours and hours of research trying to figure out what these projects are about. And there's always there's a handful of, I would say a good 5% of all of them that I've ever covered always have this this sense of not being retail friendly, right? Overly complicated it from a retail perspective. Now, it's okay to have complicated. It's great to have complicated because ultimately you have the detail that is required to get to that depth. But the actual retail investor in crypto doesn't care about physics. And to be honest, they don't have the literacy to understand what physics is talking about. So having physics there is almost a fugazi because it doesn't provide any value. And for the most part, people might look at it as a nothing burger. Meanwhile, it is amazing, right? So this is what's important, is that you have those high level details in communication, but in addition, offer a retail friendly package in a Git book that explains exactly what HBAR is at a retail level. That is so important. Communications is so important. Marketing is so important. Knowing your target market. Now, if their message is retail is not my target market, that's fine. But then you're going to lose out on a lot of the hype, right? A lot of the hype. You're going to lose out on a lot of the understanding and the digestibility of why HBAR has value to a final consumer, a retail investor. Okay, this is important, guys, because again, I do a lot of deep dives. I know a lot of people are enthusiasts of various projects, including HBAR. They know it, they study it, they went through all the white papers and all the physics. They may understand it all, but the reality is if you want mass adoption, everybody needs to understand, not just one or two people that are enthusiasts and so on and so forth. So I'm here speaking for the average retailer. Okay, guys, so keep that in mind. Just a reminder, guys, I'm going to have a summary towards the end of the video where you can check out all these little details with my infographic, and I'm going to make that infographic readily available on all the socials, including this video. Okay, guys, so let's continue going on. Now, what I do like is that they have a knowledge center. Okay, and back to what I just finished saying, their knowledge center is spot on. Okay, it's a plethora of various amounts of knowledge that you can extract from here. So you're talking about the consensus algorithm, okay, the way they integrate Bisonite fault and many other things in here. Their different hash graph, their hash graph consensus mechanism, particularly how it's fair, fast, and so on. So lots of good stuff. And I'm going to show you what they look like, and you'll see what I mean. Why I feel like these are not retail friendly. Even their swirled hash graph consensus algorithm a little bit better, but again a little bit of depth there. And we'll talk about a lot of this, and you can see encryption and many things here that you can go through to kind of like digest it all. And now, if you are prepared to read those, you got to be prepared to read things like this. Okay, now it's great read. You can talk about performance, security, governance, stability, regulatory compliance. These are things we already talked about. This is a very typical white paper, as you can see, very typical. But then it really quickly gets into complex communications. Now, I want to spend some time right here. Like, I think this is very valid. I'm going to just scroll down a little bit. Yeah, you can see a lot of performance and all of that. Okay, so I just want to spend some time here for a second. I apologize for scrolling around, but this is important. Why? Because this is what's going to differentiate HBAR, Hedera, hashgraph to the rest of the space. Now, I know a lot of us, again, we look at cryptos and we study them, and we go to, CoinGecko, CoinMarketCap, and such to get our fix every day. The thing is that, there's another type. There's a lot of projects use different algorithms to keep their ledger intact, right? And the typical blockchain, the typical Web3, talking about Bitcoin, Ethereum, and so on, they use a very linear approach, which is called blockchain technology, right? You have different things that get, I'm going to use very loose vocabulary, different transactions or different objects. Let's call them objects that get attached to a linear chain. So whether it be this contract or that contract, or whether it be this transaction or that transaction, regardless, all those transactions, all those communications that happen get linearly placed on a linear blockchain, one by one, one by one. And as each blockchain goes and gets added to the chain, the overall process needs to be, because it's linear, it needs to wait for the next block. So we need to achieve consensus and then add to the block. Achieve consensus and then add to the block. And over time, you will see that, yes, it does, get long. And of course, it does a great job of keeping track of everything. But what your limitation is that it's linear. Right, you got to wait for the blocks to be added, for the next block to be added, and so on and so forth. When you look at the hash graph technology, it's a little different. There's no such thing as linear. You can go laterally. Essentially, you can basically go from side to side, and you don't have to necessarily wait for any linearness in the blockchain. You can have other aspects of the blockchain be executed in the meantime, in the meaning that you're able to process more transactions, right, and add them to the consensus and to the ledger in a faster way, because you don't have to wait for that linear, the sequential addition of the blocks. Okay, so this is what really sets hashgraph apart from blockchain. And note that this hashgraph idea is a little it's everywhere here in the crypto space. We got a few projects that are using similar architectures. Okay, so it is what it is. And again, if you want to know more detail about, its performance, its cost efficiency, its throughput, it is fast because of the non-linear restrictions, right? Those restrictions of going in linear obviously provides that friction, right? So they're able to speed up with that regards, and you can see their efficiency and so on regarding performance. And you can see, exactly what happens here. The latency and throughput obviously improves significantly, and so so on and so forth. So their white paper is decent. You just got to understand that, you got to be able to dig into those numbers and see that this data is actually going to give you some of that detail. So compliance, obviously we talked about that, and so on and so forth. All those details are there for you. Now, the way where we actually get a little bit in more depth, of course, they talk about the graphs, and the hash graph, that is, and they talk about how it actually adds to the hash graph, and they use a nice example, a real world example, and how that works. It's called the gossip control mechanism, which means that each member repeatedly calls others at random to sync with them. Instead of waiting linearly one by one, they're able to go across the 4 different channels and basically, execute in that way, increasing their speed and so on. So you can see that they kind of walk you through the times. Each circle has a timestamp, and transaction, a hash, and so on. That's why it's called Hedera hash graph, and it's hash graph, right? So 0 or more transactions that Dave wants to send to the network. So you can send a lot more than one transaction at once, and therefore be able to increase that speed. So there's a lot of good information there, but you can see, like, guys, we get into a lot of details with regards to a lot of this documentation. Look at that. It starts to get ready into code. It starts to get into physics. It starts to get into mathematics. It starts to get into a very deep level of explanation. Now, again, I appreciate these, but you got to spend some weeks really understanding and digesting. You got to really be someone that really wants to get into that depth about HBAR. Now, the retail investor, the average investor in this space that represents the $3 trillion of market cap that we have, is not in this category. That is the biggest problem with some of these projects, that don't realize that the average investor, is not looking for this. Even though this is of highest quality and is great, they need to have something more retail friendly. Okay, so I'm just going to quickly go back and show you. These are very, 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 very in depth, and congratulations to them to providing that. Okay, so spend some time if you're interested. I'm not going to be getting into too much detail on all this because we'll be taking weeks here on this video, but it is what it is. Okay, so hashgraph, nonlinear approach to keeping their ledger active, secure, and immutable, and all that good stuff. So it's just an augmented version of a blockchain. Okay, so that's that. Let's continue going on. I showed you a little bit. Let's talk about tokenomics here for a second. Because from a tokenomics perspective, I had no choice but, again, to go into a third party. Here I'm using CoinMarketCap to give me a bit of the details. Why? Because, again, I couldn't find an official token distribution that I could trust, that was easy to find, readily available. Again, a Git book that is retail friendly would have all of these ready to go. And I couldn't find it anywhere. And I shouldn't have to be a private investigator to find such basic information, retail perspective information. So again, I'm putting ownership on the team to provide that. Okay, so as you can see right now, we have a scenario where we're seeing the foundation, okay, the network operators, which is only 3 to 4%, no big deal, so we can put that aside. So we have the foundation, which is at about 23%. We have the team, which is at about 14.3%. And then we have the community development, which is at 26.6%. And then you have the initial development cost and licensing. That's fine. It's only 8.2%. But if you put these operating and this general network operations and initial development, that kind of seems like the same thing. Okay, so when you put them together, it's about 12% or so. Just trying to make things a little bit more simple to digest, right? And amalgamate some of these categories because they kind of represent very similar things. And then you have the private sale, which is an early investor type of thing that, from an early stakeholder perspective, guys, that's a private sale, pre-sale, that is pre-launch. That's when I see things like that, it reminds me of liquidity that's going to be hitting the market when things don't look well. Okay, that's the risk of dilution that you may have. Okay, so private sale, they got in early at a great price, so we have to understand that that's a bit of a threat to current holders. Now, we have to understand that from a tokenomics perspective, the unlock schedule is healthy, and the distribution is healthy. But I want to just couple this up for a second. The foundation is, again, governed by the foundation, right? So again, it's governed by those heavy institutions, by the team, the individuals that are there that are calling shots. The foundation is not represented by you and I. Okay, but through governance, that type of governance, the governance is completely held by the foundation, the team, and all the council members are all up in that. Okay, so we have to understand that that's the control that they have. They have control over the foundation. Typical foundations are that are run through governance, a specific DAO. Generally speaking, token holders have that power to vote and decide where the money is going and which categories and so on and so forth as they get distributed. In this case, we do not have that. The team gets a healthy amount, respectfully so, necessary. We got to keep the team active, being well fed, and their families, and so on and so forth. So it's fine. They need to eat, definitely. So 14% is not a big deal, especially with this nice successful project like this one. Again, rewarding the team for their hard work. I respect that. Community and development. This is again where things get a little bit iffy because it's quite a bit. But who controls this? Right? Who's in charge of this? Is this the foundation? Is it the DAO? Is it the foundation? Again, the council members. This is not in control of the general public. This is in full control of a wallet that is, again, governed by the foundation. It's a level of centralization even now within tokenomics. So there's many levels or different categories of centralization. We have the DAO itself, or the organization, right? Decentralized organization. That's what DAO stands for, guys. So in this case, from that perspective, they're not as decentralized as many others. Here we have the tokenomics. You can see they're very concentrated within the groups that have the power. The foundation, the community and development assets go to the team or go to the foundation, and they call the shots on those. And then you have the private sale, which again is all very, very concentrated to individuals that either got on a whitelist or were able to get early access based on different factors. And that in that case, again, very concentrated capital in that category. So overall, we would say that from a tokenomics allocation perspective, this is also not as decentralized as I would like to see, right? Despite the majority of the tokens being unlocked. Okay, this is important because they do have a max supply of 50 billion HBARs, and their circulating supply is about 42.8 billion, which means that they got a lot of them already in circulation, right? So they only have a few left to be in circulation, which means that we don't have that risk of dilution from a emissions perspective, but we do have the risk of dilution from a concentrated capital perspective from the private sale, the community development, and the foundation itself. This is important because, again, we have a very a decently centralized authority over these categories, and they're large categories. So from a tokenomics perspective, although this looks healthy, you can see that the purple, which is the private sale, is quite a bit. The orange, which is the community and development, which has become quite a bit, and the blue, which is the foundation, is quite a bit. Guys, we have to understand that the amount of tokens that represent us, the reality is it's peppered in within all of this, and it's hard to track. It's hard to track from a tokenomics perspective because all these wallets are also not transparent, right? We don't know how much the foundation really holds at the current moment. And again, this is a big complaint across the space from some individuals in the HBAR communities, is that the tokenomics, basically transparency is not really there. Okay, so it is also, a thing, guys. We need to have a bit of transparency so that we feel comfortable with the tokenomics and stuff. So, despite public supply disclosure, some in the community have expressed concerns over the lack of clarity and transparency in the timing and the volume of token unlocks and so on and so forth. And this is important. Okay, important stuff. So, we're getting the emissions as we can see, and the unlock events. It is what it is. Small unlock events. Especially to come. As we can see, we're almost fully diluted. Okay, so it is what it is, guys. Pretty good so far. All right, so let's move on. was looking at the network, and you can see transactions over time are heating up beautifully. HBAR is doing really good. Network fees are coming down significantly. Like I mentioned, very well balanced. But at the end of the day, guys, I can expect that when transactional volume is not there, as you can see, the volume across the crypto space right now is not at the hottest, which means that generally speaking, it would be within the incentive or within the best interest of the protocol to reduce fees so to entice individuals to get active, and that's exactly what's happening. Active accounts, we can see some accounts coming down, not the greatest look, of course, through activity, but if you look at all through the beginning, we went up very nicely, and now we're kind of dipping down a little bit. We go up for another higher high here on active accounts, but one thing, again, I don't see like wallet distribution. Like if you go a typical scanner, right, that's open to the public, where you can see all the details, like which wallets are the heavyweight wallets, which hold the largest amount. This is not providing that transparency and that clarity, to the point that we don't even know which wallets belong to the HBAR protocol, right? This is where things get a little bit funky, right? So again, this is the difference between a very open, decentralized protocol versus one that is semi-centralized and has, a focus on compliance and so on and so forth. So although I like it, you guys know I like HBAR. It's one of my, bigger holdings within the compliance narrative. ISO, even though it's not necessarily ISO yet, but it is within that realm of compliance. Okay, so although I like it, you have to understand that it's a different flavor of crypto. It's just a different flavor. It doesn't really represent Web3 as much as we want it to be, but it represents utility as much as we want it to be. So you got to really, know how to diversify your portfolio within these narratives and these ideas that are floating around. Okay, let's take a look at the team real quick. We can see that we do have some good stuff happening here, right? General info, the backers, some digital currency backers, of course. The chart we'll talk about in a second. What I really wanted to show you here is the team. We do have some team members here that, it's a pretty big team. Lehman. We got the founder, co-founder, Mance. I'm not sure if this dude is still part of the team or not. I'm hoping that this is up to date. I don't think she is either, and so on. I know Brett is still the chairman. I think he's still there. It's hard to keep up with all these guys. They have a fairly large team, right? And when you have a fairly large team, you got to be really you got to be in depth, because not always do you see the founders and the co-founders and the core team to be the most valuable assets to the team. It's not always. Again, I do a lot of deep dives, and sometimes you see that the core teams, all they really are is venture capitalists, but they hire the right people to work for them, and ultimately their team as a whole is great. Now, let's see what these guys are about. Okay, let's just kind of dig in here. You can see that they have 145 associate members, which is a fairly large team. Once you get below about 100, you started to get into the smaller side. But above 100, you start getting into a larger team. It's very, concentrated in the sense that the spread across team size is very short. It's not that wide. And I like to see a medium-sized team with, lots of talent, of course. We do have some great talents here, of course. We do. Wow, you can see that we got Jason, founder, investor, different things. So right now we got Greg, Bell, and so many others. Some crypto, digital assets head, member on blockchain. There's engineers here. There's a lot of different ones, but a lot of us are mostly interested in what the core team is all about. And it's important that the core team, particularly the founders, put the face of their top engineers up here. Right? That's important, right? Because you need to have that representation. So chairman of the board, Mance Harmon. Okay, so let's talk about him. He's right now a chairman of the board and co-CEO of hashgraph. Okay, full-time, 3 years, so he's there. And Swirls Inc. Swirls provides platform to build and run shared worlds, fully distributed applications that harness the power of cloud without servers. So you can see this Swirls is very, integrated within their actual tech stack with their consensus. Okay, so it looks like this is going to be the back end company that develops some of the technology for hashgraph. CEO and co-founder, of course, course, of Hedera Hashgraph, and then Ping Identity, head of labs, organization responding for facility discovering innovation, contributing to new products planning. Okay, chairman of this, trying to figure out where he, University of Massachusetts, it's good, computer science. So he's an engineer, guys, Mississippi, computer science. So he's an engineer. He's just an engineer. He's involved in the crypto space and the tech world, and he is a chairman. So this is a scenario where you got the core team, actually individuals that understand technology and how to make it work. Okay, not just to sell it as a package, but how to make it work. Okay, we got another individual, Brett. He's a chairman, advisor, director, and let's see, he has 20 years of ICT industry coalition leadership experience. He's got lots happening here. He's the chair at Hedera, president, executive director, and governing council. FIDO Alliance, and some good chairman board meetings. Okay, so he has high level experience. His passed through open standards and strong authenticity. So you can see this is all about cryptography and safety and online and such. Again, digital government. And advisor, Alma College, physics, and this is crazy. Like, these are educated individuals, computer, music, multimedia, technology, innovations, and so on. So we got some very interesting talents here, okay, within the space, physics and maths and different things. This is what you want to see from a high level. And then you also want to see some business acumen. So let's see where we get to this. Chief scientist, more science, more strength, of course, founder of Swirls. I feel like we need to look into this Swirls. Let's open it up a new tab. Founder, chief scientist, and so on. So Carnegie Mellon, top tier university, computer science, bachelor degree in computer science. Guys, these guys are ready to cook. Just throwing it out there, okay? Now, Swirls is a software platform designed to build fully distributed applications that harness power of cloud with servers. Guys, if you notice, a lot of the HBAR documentation refers to the Swirls consensus, Swirls algorithm within their tech stack. So something to pay attention to, of course. And if you look at its people, you're going to see, a lot of the similar faces and within the organization here, as again, Mance and so on. You can see their exact representations here. So there's some, layering to this organization. And of course, the layering stops here with us at HBAR, and then a lot of the representation there on HBAR from these individuals. Okay, so 8 associate members. Just very small little organization here of top contributors to the tech stack of HBAR. Interesting. I've seen this before, many times in this space where they have this type of infrastructure within their organization. All right, guys, that's that. Their blog, like I mentioned, their blog is really cool, really good, really up to date. January 22nd. They have some really nice partnerships, but I'm going to, say that they're good relationships. Okay, so McLaren Racing today announced a multi-year partnership with Hedera Foundation to leverage Hedera Trust Public Networks. How is that the case? This is the reality. When I see the word partner, it bothers me because McLaren Racing has nothing to do with, a blockchain, cryptocurrency tech stack. So unless it's a promotional partnership, which for me is not a strategic one per se. It's a very those are one of the worst because they come and go and they're not deep rooted. They're only there for promotional purposes. Other than that, nobody cares about their final core product. And for me, this is a nice relationship, and you're going to see a lot of great relationships. In fact, one that was released very recently during the time of me doing some research. Unfortunately, I wasn't able to get this really clear because again, it was only on January 23rd, and I did my portion of research regarding their relationships earlier. And here we are. We got, of course, is the Hedera Council an actual partner? No. It's not a partner, guys. That's not the council, not a partner. So I am not sure, like Hashpack. Okay, these are small but interesting relationships, and I would suggest that you go and look at them because they're relatable, right? Partners with Hashpack, Hashgraph online, and and so on and so forth. But we got to be very clear about what is a strategic partnership. Which, in my opinion, HBAR doesn't need any strategic partnerships. It's a full-on tech stack. They don't need it. right? The only thing they may need is something to do with promotional, and maybe if they do have something in their tech stack where they need a bit of implementation and they see another project that has it and they could benefit from working together, that would be useful for HBAR in itself. From a promotional perspective, or just having a project build on the HBAR L1, that's not a partnership. That's a relationship, no doubt, but not a partnership. A partnership is one where both players have an incentive to help each other get to the next level, right? In an equal manner, equal playing field, right? It's not the case in this scenario. It's very hard to define partnerships in this space because as an open ledger or open platform or open software solution, you don't need permission to use their technology, so it's not a partnership. But in some cases where it's centralized, you may have to apply and get approved by a council and so on and so forth. And if that's the case, maybe even still, that's not even a partnership. So again, think very critically about the relationships that projects claim. And you can see great documentation, guys. They're keeping it up to date, keeping everybody educated. Kudos to them. I think this is one of the best blogs that I've seen in a good while. Okay, so good stuff there. And if we get into their socials right here, you can see that their X is doing pretty good. They got almost 500,000 followers, 462K to be exact. And we are giving them a follow. I suggest you do the same so you can keep up what they're doing. Let's read their pin post, their most recent. Okay, so January 22nd, on track, on chain, proud to announce a multi-year partnership with McLaren Racing. Hedera is now an official partner. Again, why, how, who knows? What is coming? Free to claim digital collectibles? Absolutely not. I don't approve of this as being a partnership. Are you going to give me NFTs and all of that? Guys, please, 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 please. A new fan experience built on HBAR Trusted Public Network? Absolutely not. This is a promotional stunt. It is great for promotional, for advertising, for great relationships. 100% great, 10 out of 10. But from a partnership perspective, this comes and goes. I don't qualify. Okay, I don't qualify this. So you got to move on, guys. You got to be critical. I want to see something that's really going to stand apart. So the Hedera Council welcomes these new individuals. So now they're getting that rotation into the council. By joining, they bring expertise. So this is important, guys. These are not partners, by the way. These are individuals that now have a vested interest within HBAR by being, part of the council. Okay, so building enablement and ecosystem visibility and accelerated real-world adoption across the HBAR ecosystem. Guys, am I not saying that they're going to bring value? Of course they're going to bring value, right? They're going to bring value. Why? Because they have experiences, real-world experiences, connections, open doors, this and that. It's great, no doubt, right? But they're not partners. Right, they're not partners. They have a vested interest other than partnership, right? So they're part of the council and so on. They're going to be exercising their governance rights and so on and so forth, and governing the nodes and so on. So this is great. Again, we got to call it what it is. This is a great relationship. These are great relationships within a slightly centralized organizational structure. Okay, let's move on. Let's see what else they got here. So this is an interesting one, as I mentioned. Service now next Wednesday during the tech crunch. So there's not much relationships because I feel like ultimately HBAR doesn't need relationships. We have to understand they offer a solution, and their solution is an L1, a layer one, a blockchain solution, but it's not even a blockchain solution. So to have this is not even that fair. It's a hashgraph solution, right? So for them to even call it a blockchain is not fair. Also, because they're using, in fact, they're communicating a bit weird, right? So they have AI, they have sustainability, they have everything else. But the truth is that they don't really need any partnerships, in my opinion, unless it's promotion. So I don't know, embracing buzzwords. Again, San Francisco blockchain, what are they talking about here? Who knows? Embracing buzzwords and so on. Sure, stay fresh, I guess. So let's move on. And then this. Okay, so the first HBAR ETF. This is great. This is great news, right? Is it a partnership? Not necessarily, no. But it is a scenario where, again, a relationship comes to play, because HBAR is not in partnership with Vanguard, right? Vanguard Group is now hosting or offering the Canary HBAR ETF. It is now live, right, on Vanguard Group. It's the $11 trillion investment firm. Pretty big, right? It's pretty big news. It's pretty good to see HBAR. Now, you can expect that the traditional financial space is going to adopt compliant projects a lot easier, even especially if they're ISO certified, right? So in this case, guys, HBAR is right there, and if they're taking a bit of a leap here, maybe a bit of speculative approach. I think the safety that their compliance mentality has is going to allow a lot of these traditional investment firms to get involved. It's going to giving them that bit of confidence that they need. We need more confidence in this space, not altogether. We need a little bit more of that transparency with regards to regulation in this space. But it is what it is. All right, guys. So generally speaking, it's pretty good. Okay, it's pretty good. Now, as you guys know, I release an infographic every single week for all the projects that I cover. So I'm going to be posting this full video, all over the socials, so you can get the full length video. I'm going to be posting this review as well. And not only that, the infographic is going to be all over the socials, so you can use it as a bit of a cheat sheet or a quick refresher when you want to know a little bit more about the project. Okay, so guys, stay tuned for that. Be prepared for that. It's going to be available to you guys very, very soon. But in the meantime, guys, I think it's very important that we pay attention to some of these details and recap some of the benefits, maybe the good, the bad, and the ugly. Okay, so ecosystem. They got a pretty good one. Of course, it seems very young still, but they're working on it. Hashpack wallet, Blade wallet, okay, again, native wallets within the ecosystem that's supported. Hashscan Public Network Explorer, we took a look at that one, and the hgraph IO analytics dashboard that they got going on. All these metrics are obviously great, right? And then your DeFi and real world assets like Sorcerer Swap and Stater Labs, Pangolin, which is a multi-chain, but they also now accept HBAR. That's pretty good. And Dovu and Atma, and many others. Okay, guys. So lots of good stuff there from a ecosystem perspective, but it's still very young, to be honest. It's still very, very young. So we have to expect a little bit more in the next little while. And again, that means that there's opportunity for growth. Okay, so you're not buying a mature asset that is ready to, basically go sideways for a good while. This thing might be getting good traction in the next little bit. So utility, guys, the utility is spot on. The token, the coin itself has a lot to offer. Again, you can use it for transaction fees. I think that's self-explanatory. Staking, being able to secure the network via proxy staking, and there's no slashing involved, which is great. Smart contracts, obviously, EVM compatible smart contract execution. So being able to use the coins to execute smart contracts, token services, consensus services, and all kinds of other unique features that it may have that allows the token to be used. Okay, so 10 out of 10 right there. And ultimately, that's what we're looking for. Now, remember, it does have governance, but not in the way that you think it does. So from that perspective, this is a project that just doesn't have governance, and that's not part of its token utility, unfortunately. But it is what it is. That's part of its value proposition, is that the individuals that call the shots are part of the council. Roadmap, clear milestones met, in progress objects clearly stated, and no timelines mentioned, which is unfortunate, right? So they basically, tackled all their milestones, on their roadmap that they have. It's very clear that they've went through it all, and they've met their expectations. But the project, the future, is also very clearly stated. But without timing, you don't know when things are going to get done. Now, we could use history to suggest that HBAR gets things done, right? So in that regard, it's healthy to speculate. You can say, like, they have a good track record. So yeah, but nothing beats an actual timeline, at least quarterly timeline, to let us know what they're putting effort in the next quarter or two. And that way we can kind of align ourselves accordingly with a bit of transparency. The team is 10 out of 10. It's a large team, fully docs, council, are executives from large corporations, talents in cryptocurrency, cybersecurity, governance, and digital ID, fintech, and much more. Guys, there's nothing else to say other than 10 out of 10 team. and they're getting a lot of attention from traditional finance, and that's a good sign that even the traditional space is trustworthy of these individuals. The socials, they got lots of good followers, almost 500,000, good engagement. Discord is active. Telegram is only announcement only and not very active. And no Gitbook, guys. I'm going to have to spend some time here. Again, reiterating my expectations when I do deep dives, but a lot of it revolves around communications. And the best tool that I've seen that works the best is a Gitbook. Okay, so we'll talk about that in a second. And the tokenomics, I'm not crazy about them. Okay, and again, there's a level of centralization within the organization. There's a level of centralization within their tokenomics, and that foundation that has 23% control over the tokens is a little bit iffy for me. And again, it is vested, but the vesting schedule is almost fully diluted. So it is what it is. Early stakeholders, in general, as a category, hold approximately 38.5%, and the foundation is 23. You're getting a little off there with the way the tokens are distributed. So little risk of future dilution means that there's not a lot of emissions coming out in the near future because they're almost fully diluted. But when you see the concentrated of capital that within these categories that are not behind a traditional governance that is decentralized, but in fact behind the team and the foundation that is centralized to a degree, it is problematic, right? It kind of iffy there. So look, tokenomics are a bit iffy because of that, but ultimately, guys, this is the way tokenomics are judged in this space, right? In this space, we can't use the same measuring stick that we use to judge tokenomics or economics from a traditional financial perspective, like looking at the tokenomics of Google, for example, or Tesla, right? Very different approach. Now, if we were to do that approach, it would be totally fine because we understand the centralization of traditional, stocks and commodities, or stocks, that is. Now, in this case, it's a different category, guys. We're supposed to represent decentralization, even via tokenomics, not just organizational. So organization, we can digest a little bit, right? Because their value proposition is we're not going to be so decentralized, but we're going to be a bit more centralized, and we're going to provide value for that centralization. Given, I'll take it, right? Let's see what you got. However, from a tokenomics perspective, you're actually putting your money where your mouth is as well. But when you're talking about money and dilution and governing rights and all of it put together, it looks kind of funky, right? It's not the easiest to digest from a retail perspective. Relationships, honestly, the relationships are good. If you want to include the governance council member relationships that they bring in, it seems a little bit disingenuous to say that Google, IBM, Boeing, LG, Ubisoft are all relationships, but they are. But they also have a vested interest, right, to a degree into HBAR. So a little bit off, maybe a conflict of interest a little bit there, me considering them, complete strategic partnerships or relationships that are very genuine. I'm a bit off with that. We got to, add a little bit of that ambiguity there with that relationship concept. And then supply chain, we got Avery, Denison, and ServiceNow digital credentials. These are great relationships that they got. I feel like they may not need relationships, right? Maybe promotional relationships, like I mentioned, like the one with McLaren that was just announced a couple of days ago. Unfortunately, I couldn't get it on here, but that one is a promotional relationship. Despite them having some sort of NFT or on chain, it doesn't matter, right? The reality is that's a promotional thing. Right, so exchanges fully available everywhere, guys, literally everywhere. I'm glad to announce that not only is HBAR available on all exchanges, maximum liquidity, Binance, Coinbase, Mexi, Bybit, you name it, Bitnex, BTCC. Guys, I got links in the description if you're interested in any of these exchanges. They're offering great trading bonuses right now. But what's interesting is that I can actually say that they have an ETF, Canary HBAR ETF. So you can get this from a traditional investment opportunity, right? If you can't, let's say from an organizational perspective or a personal perspective, can't get access to these investments via a crypto exchange, you can always get them through the Canary HBAR ETF in a traditional way from your banks and so on and so forth. So great stuff overall for accessing liquidity in this market. So 10 out of 10, not really an opportunity there, guys. Unfortunately, exchange listings are always great, but not an opportunity. But the opportunity is maximum liquidity. So I appreciate that. As you can see, HBAR still kind of trading around that 11-cent mark, guys. We could have gotten a bit of volatility since the making of this graphic. So bear with me there. But you can see that generally speaking, we got a lot of good stuff here, considering that the fully diluted and the max supply and all of that is pretty healthy and so on and so forth. So when we look at overall supply, we're doing pretty good. Now, if we go over here and we start looking at the overall verdict, okay, just want you to hear me out here for a sec, because I try to take a very retail perspective. So again, it's an L1 EVM hashgraph technology. It's not blockchain, it's hashgraph. So if you're interested in this type of architecture, I would highly recommend that you read more into it from a tech perspective. Centralized treasury control. A large portion of the token supply remains under the control of the Hedera Council, raising concerns about centralizations of economic power. This is something that we need to digest, whether you like it or you don't, right? It's a very open, transparent conversation here. Not try to flood anybody's bags, but we got to be real and be able to defend your thesis, despite if some of these points go against your thesis. Some in the community have expressed concern over the lack of clarity and transparency in the timing and the volume unlocks. I agree, even with distribution and wallets and so on and so forth. From a transparency perspective, that is required. Now, in a fully decentralized protocol, this concept is enforced significantly. Now, in this case, because you are allocating a level of centralization, it may not be something that is completely enforced or maybe even completely expected. Okay, very important. Centralized governance, despite having a rotating council of large companies. So again, that council's made up of large companies that come and go, and they rotate in and out. Critiques argued that this structure limits decentralization and community influence. Of course, because you're not getting the grassroots, the low-level individuals, the retail investors, the ability to get involved. And what you're relying on is, again, organizations that are large, influential, and again, political, to make decisions about the blockchain. Guys, this is very similar to what we already have going on to a degree. Okay, to a degree. Again, it's all about degrees and spectrum here of centralization and decentralization. Not non-blockchain. So again, it's not a blockchain. It's Hedera hashgraph is not built on a traditional blockchain, but on a novel consensus. It's not that new, but again, it's novel. Let's call it novel consensus mechanism called hashgraph. So it's a consensus mechanism. It utilizes gossip, about gossip, the virtual voting to achieve asynchronous Bitunix fault tolerance. Okay, so very important stuff here. If you want to get into the architecture and the physics behind how this works, please go look into it. Again, I don't get into that much detail here because I try to keep the video within a 1 hour mark, or else we would be here for weeks. Speed and efficiency, it's fast, it's low fees and all of that. Scalability, again, TPS, all of that, very quick, 5 to 20 TPS on proof of work blockchain. So it far exceeds that with 10,000 transactions per second. Crazy, right? While HBAR is not officially listed among the ISO 222 native cryptocurrency, it has shown an alignment in building compliant financial infrastructure that can interoperate with the ISO standards, essentially saying, although it may not have the title, it definitely walks the walk. Okay, so maybe you're in a speculative mode that eventually it will be included. And I see that it should ultimately. The spot ETF is there, as I mentioned, via traditional brokerage platforms. You can get access to a spot HBAR ETF HBAR, which is good. Not enough synthesized information to provide clarity to retail market. Guys, it is very clear that this is an intense project, and it's a very mature project, but there's not enough. There's not enough educational material that clearly state certain things in a very digestible way for the retail investor. So that's why I do videos like this, right? So that the retail investor could get a bit of that, digestion happening, and then they can go off and do more detail, more research if need be. But a Git book, guys, it needs to happen. All these projects need to have their Git book up to date, ready to go, and so on and so forth. Information provided is not retail friendly. Again, hard to read and hard to digest for the average individual. And if again, they should have proper communication for that target market. Documentation not a typical Web3 standard. 100%, over 140 deep dives under my belt. Now I can officially say that the standard is clear for me on how you communicate with the industry, and they are communicating with a very few handful percentage of the community with the style and approach that they take. And it's not a good idea, in my opinion. They need to have both. Right. So again, I spent a little bit of time there critiquing that aspect, but it is what it is. HBAR with the market cap of XRP, guys, could it be possible to see HBAR catch up to XRP or even come close to it? Why not? I'm just throwing it out there. Again, these are not targets. These are projections. This is what I think that it could do. If we get fresh capital in this market, number one, total market cap needs to increase. We need to see fresh capital. Number two, we need to see HBAR continue to show that it has its values and ultimately be able to play at the highest levels like XRP is, right? Within this compliance narrative, ISO narrative. Now, I'm not saying that it's going to flip XRP or beat XRP or even catch up to XRP. I'm just saying, let's say XRP flies and runs higher and HBAR also flies and runs higher. It would be acceptable to see HBAR follow in the path or in the footsteps of XRP and reach right around $2. And a 20x is very possible given its market cap. Okay, so, and especially with its narrative being so small and obviously seeing all the strength within the narrative within its compliant lane, it could definitely do very, very well. So my overall rating for HBAR is an 8 out of 10. Again, it has a lot of a few little things that need to be taken care of, but generally speaking, pretty good stuff here. All right, guys, as you guys know, I do give you charts with this, so let's take a look at what's going on with the HBAR chart. HBAR, generally speaking, like the rest of the space, still is looking a little bit sloppy. And if you look at this market structure right here, nothing says otherwise. It still looks bad. However, guys, from a risk to reward ratio opportunity, either you zoom out or you zoom in, there is an opportunity. So let's take a look at this in a little bit more detail. Now, right now, I don't have any TA on this chart, but let's zoom out just real quick so we can get a big picture. Okay, this was the 1010, the October 10th wick. Okay, this was range lows multiple times, good volume, point of control is there. We have to understand, because we didn't sustain an uptrend here and we made a confirmed lower high and a confirmed lower low, we could still come down further. We have to accept that. We could see HBAR reach the point of control at about 5 cents. That is a possibility. If you are ignoring the possibilities in this space, you are not trading, you're gambling. Okay, because ultimately, if you're bullish on HBAR, you are salivating right now at a 5 cent HBAR. You want that to happen. You get a 50% discount. If you are not happy with an HBAR at 5 cents, you're buying for the wrong reasons. You're not fundamentally bullish, right? So that's a totally different story. You're emotionally invested, and you got to rethink why you would want HBAR at 5 cents. So please, guys, do yourself a favor, put your emotions away and your convictions away for a second, and say to yourself, what am I going to do if HBAR comes back to the thick of things, which is around 5 cents point of control, and that is definitely where all the volume's at the previous breakout zone. Okay, right into here. Okay, now let's introduce TA. This is my previous TA. Now, I couldn't have made it clear enough that this was the time to buy HBAR, okay? And that's where I started accumulating HBAR. If you look at the history on the channel, I was producing HBAR videos almost every week in this zone, suggesting that everybody should be buying. Then it left the station, and then I stopped making videos, okay? Because I'm not telling you guys to be buying tops, ever. Now, all of a sudden, I'm going to say this. We got the impulsive move, and we are also seeing a retracement, a three-wave structure, A, B, C. This typically is a three-wave retractive structure. That's all I'm going to talk about. That's all how deep I'm going to go with Elliott wave. You do the rest on your own. After 3 waves to the downside, we can suggest that it could be ending, the retracement is done. If we go down for another wave down, we're going to get into a 5-wave structure, which is defined as an impulsive move, which is an ugly thing to see. Okay, so retracements are healthy. Impulsive moves in the direction, especially downwards, are not great. However, guys, we could melt just a little bit lower. What I mean by that is we could have these slow grinds or slow melts to the downside that show us multiple drives of divergences, class A divergences, get into this falling wedge structure, and then, make a reversal. It happens. However, I'm not going to start to be a fortune teller or predicting what could happen and what can't happen and what should happen and so on. I don't care. The chart is going to tell me exactly what I have to be doing. At this current moment, despite my interest at 5 cents, remember, keeping some stinky bids and capital reserved for those opportunities definitely need to be there. Okay, that's why the big arrow is there. However, what we're dealing with right now is important, guys, because if this becomes another break of structure, we're coming down for a lower low. Okay, that's a fact. If we break below this bottom, we're coming down for a lower low. And whether we like it or not, there's still that wick that people feel that need to be filled. We still have the possibility to fill some, lingering limit orders that are down here and ultimately still come down further. Now, in line with what I said earlier about the meltdown, right, we could still see price action that literally is going to hold this general area up, but still melt and melt and melt. And we'll usually see signs of like divergence here. Now, we could also be seeing signs of divergence here, but when we get these falling type of wedges, we get signs of divergence, a low volume, and then all of a sudden, bang, 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 and it turns into a reversal, right? So right now, we're not getting that either. So we got to be patient here. What else could we see here? So falling wedge of some sort with divergence. We can see the sweep of the bottom, a failed breakdown, get back above. That's time to get it in long. Okay, close the daily candle, back test, long, break of the previous high, long, build your position, long, first target, top of the range, take a bit of profit and trail up a stop loss. If it breaks out, congratulations, you caught a great entry. Risk to reward, obviously, you want to get in your first long position. If you're going to get in here, you got to be able to endure this potential sweep if it happens, because if it doesn't, that's fine. You're cool. You bought the bottom of the range. You're not gonna, feel the heat, and you may have not, got all in on your bag. But what I would say is this, guys: if you slowly build your position within this range, and your first long position, let's say you buy it here and it comes down, make sure that it's either the lowest leverage, 2-3x maximum 3x, or spot. Wait for the confirmations. Break a daily candle, then you introduce a bit of leverage, 2 to 3x, increase your leverage position on the back test, increase your leverage position on the confirm of the higher high, and then we start moving to the upside. In the meantime, you have spot, you have leverage, you're cooking, and then that's where you start getting defensive. However, alternatively, from a bearish perspective, that's still bullish. Bullish, obviously, is we get a bounce right here and we go, right? Obviously, that's why I'm saying DCAing, building your position in general here, boom, for a potential breakout. Now, what I want to introduce is the bearish case scenario, is that we come back up, we get rejected here, and we come down for a BOS, and it's over, guys. This thing's coming down like a sack of potatoes. Sometimes that this doesn't even happen. We come up, just a bit of a retracement, and then bang, continuation. Now, it's all dependent on Bitcoin. It's mostly dependent on Bitcoin, but also Ethereum, and how the general total market cap attracts fresh capital in this space. As of now, we're seeing the total market cap do nothing, which suggests that we're rotational. We're just rotating capital amongst one another. And the better traders are going to win and the market makers win. That's how it works. Okay, so just understand that. So what I'm looking at is this. Now, let's take a look at oscillators. You can see the expansion coming in here on the daily. That red expansion looks pretty ugly, not good. And then we have the momentum looking a little funky here, iffy, right? Indecisive. It got to the chop zone and is getting rejected again. So I'm not really that happy about it. If we get onto the 4-hour, we might see something different. Expansion coming in. I'm still not happy about it. Momentum looking choppy and ugly. Yes, volatility is oversold. Fine, but where's the shift of market structure? Where's the higher high or the higher low? Give me one, guys. This looks like a distribution. You can't deny it. Look at that. Complete distribution. Dead cat bounce, break below, come down to lower low. It is what it is. Now, look at the 1-hour. Where's the higher high or the higher low? I don't see any. Look, another sign of distribution right into here. Rounded top type of scenario. Look at that. Look at the Uno reverse on the volatility line right here. I'm not look at the expansions on the 1-hour. I'm not liking that. So, guys, look, you got to decide. In my opinion, again, not financial advice, guys. Do your own thing, please. But what I would be doing is focusing on spot. I would be only touching spot. And if I was going to get into a leverage trade, I would be waiting for one of the setups that I talked about. Because there's no chance, there's no reason to be taking risk right now on altcoins. Because generally speaking, we're not seeing strength out of the total, Bitcoin or Ethereum. So in this case, to be honest, I wouldn't even be going short right now. Because again, the breakdown could get some short-term support for a dead cat bounce and leading into the new week, and then maybe after breakdown and distribute. Or we can do a quick sweep overnight while you're sleeping, do one of these, and like I say, get our reversal and be done with it, and then continue to the upside. But until we get something, it's not playable, guys. Spot only. DCA. That's all you could really do. Zoom out and look at where the chart is. You're not buying any tops. That I can guarantee you with 100% certainty. I'm telling you right now that you're not buying any tops. You're not necessarily buying at bottom, but you're buying closer to the bottom. And if you're FOMOing right now, just buy a little bit so that you can satisfy the FOMO from a spot position perspective. In the meantime, what we have to follow here is a market structure shift, a change of character suggesting a reversal, because momentum and such is still not looking good here on HBAR, unfortunately. All right, guys, we did pretty good, guys. If I've offered you any value in this deep dive video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.